Good morning and welcome to the Saxo Bank Morning Call. It is Tuesday, December 11th, and we had an interesting session on Wall Street yesterday with the S&P and basically the stock indices, broadly speaking, looking at those new lows and then coming back from the brink. I have a chart here just to show a brief recap of the session where we punched below that 2600 area. The actual low was just above there on the future and managed to close approximately unchanged. Peter, we talked about before the broadcast, there was no real catalyst for the big bounce back, but that's just a technical thing. Or?
It seems like it was a very technical year, as you can see in the chart here on the screen. We've highlighted with the red line sort of the area where we came back, or that's a line from the low point we had back in late October. And I actually remember last night when I looked at the S&P 500, the futures were down 1.7%, and I actually thought for a second, shit, now we're going very south, because it was extending momentum, and then suddenly when I looked an hour later, we were almost back into the green, and there was no real news, there was no expect. So the big question here, is this positive or is it a sign of weakness? I think really short term, I think it's quite encouraging that there was so many bits that came in. So maybe short term, I'm a little bit more positive now than I was before. But I still think that the sentiment is extremely fragile and weak.
To my mind, at least the only catalyst fundamentally would be a non-hike in December, I think, from the Fed. That's a bit of a stretch to ask for that at this point. Or something, a very, very dovish hike if the market is getting too pessimistic here. Kim, you focus a bit more on the cash index and the lowest cash close we had for the cycle. I've got your chart up here where we have that level. It's a bit higher than the actual.
It's a little bit higher. It's drawn around 26.32 actually, and I think it's interesting to see how many times it's actually tested that. If we also had an intraday chart, I sent it out to some of our clients yesterday, we can see how many times, actually more times than what we actually see there. So it's around 26, 30, 32, and the market closed, it's way back above yesterday. And I think short term, it's positive. And what we also should take into account, if we look back in the calendar, is that the so-called Santa Claus rally, it usually starts mid-December actually, and that's more or less where we are now. So maybe bits are starting coming in now. I don't expect a massive rally, maybe 100 point higher over the next week or so, but don't expect new highs or anything.
But remember, we're never more than one tweet away from a 5% move in the equity market, up and down.
That's correct, and I think
it can go very fast.
And I agree with you, Peter, that the sentiment is negative. The overall trend is down. So this will just be a rebound of a few percent as we have seen before.
Yeah, and as well, I saw an interview with market legend Paul Tudor Jones yesterday, just reminding us that when we see the Fed sort of starting to pull back from the hiking cycle, we've seen some pretty tremendous rallies in the past. The ultimate example being the Fed panicking in September because realizing how bad the financial crisis was gaining momentum, cutting that 50 basis points, and then we see a massive rally to the market top of the time all the way into October as the economy was essentially shifting into free fall. So anything can happen here short term is our main message, and we'll keep our eyes out and those key lines in the sand there. And then you have the DAX chart here, Kim. Boy, that was an ugly session yesterday. I imagine we must be opening a little bit stronger this morning, but that's not looking pretty.
Yes, there's a little bit of rebound this morning, but I mean, this is not the first time we see the chart. I think I brought it into this morning call here several times. It's the weekly chart of DAX. We broke the 10,800 support, and we're down there in this support area now. I mean, there's nothing really that holds DAX until around 10K.
Okay.
Going into next year.
Right.
Yeah. It's not going to happen overnight.
No. Big news. I mean, incredible news, really, if you ask me, out of Europe. Overnight, we had that speech from French President Macron late yesterday, where essentially you're seeing a president of a major nation being bullied by the crowd. This is an incredible development. Of course, he doesn't meet all these measures that these protesters were asking for, but tax cuts, raising the minimum wage, and almost a dramatic mea culpa, if you will. The signal value of this is tremendous, though. We're seeing a country now in Europe moving towards a much larger deficit, estimates of 3.5, even 3.6%, and that's assuming we get a reasonably strong French economy next year. This is incredible stuff. It really changes the game in EU terms, also in terms of Italy's negotiating position. You're talking about France running a 3.5, 3.6% deficit compared to GDP, and Italy is merely asking for 2.4%, a very small expansion to where it was before. So I think this is incredible news. And I have a chart here actually of the French to German 10-year spread. We've seen that etching, marching to new highs relative to the last many months here. To me, this is a non-starter. I mean, if you have France, becoming non-core, I think you're talking about the EU breaking apart. But just the message here that EU has to be in it together, or else if you're talking about to the level of France.
But we also have to remember that France and Italy has so many connections, especially through the banking system. There's so much exposure from French banks into Italy. There has been these continuous talks for years about mergers and acquisitions between French and Italian banks. So I think it's very much in the interest of France to keep Italy inside the Europe. So if France can pave the way for more flexibility on the budget, I think we could, as you said, I think it's new dynamics, and it puts Germany in a very interesting position.
Yeah, and Germany just electing a new leader of the CDU party. Merkel's to stay on, but to me, this is not enough of a populist move in Germany to avoid some sort of widening populist pressures eventually spreading to Germany as well. Now, interestingly, the euro was not particularly strong yesterday versus the dollar. The reason there, I think, being the whole issue of Brexit. I think normally if you're seeing fiscal impulse coming in and expectations thereof rising, you would expect that to be currency positive. Keep that in mind for some of the euro crosses, but at the same time, the Brexit issue weighing the euro down. I have a chart here of cable where we're seeing that May's cancellation of that vote in Parliament on the Brexit deal, as she recognized it was going to see an epic failure, saw sterling punished. I just don't see why the market was so surprised about this move. It was clear this was headed towards failure. May now going, as one analyst put it, cap in hand around Europe now, trying to get at least some sort of assurances from the EU side. They're saying they're not going to renegotiate the deal, but they could maybe round out the language or create some assurances around this whole backstop issue, which is considered a non-starter by so many in the UK. Regardless, we have the cable chart here. We've seen it wasn't much of a trend line, but slightly upward sloping. The actual lows. This is a weekly chart. We've punched through there that 126.65 low for the year that was taken out. And Kim, you suggest the target could be towards 121 to 122.
Yeah, that's the area. You're drawing the horizontal blue line a little bit lower there. So yeah, that's again, I think all bets are off really in terms of cable. There's not really any support until 122-ish.
Yeah, the reason I drew that line myself, that was just the lowest weekly close. So that
exactly.
The type of area you might look
exactly. For. And I mean, it's not particularly strong, but that's why we're talking about. I mean, 120 we could also go. Again, you see that development sometimes moves much faster than expected. So how fast will it go? It's Q1 next year, I believe. That's the only time span I would give on it. But it's definitely down.
Yeah, and I see there was a pretty strong euro sterling move as well yesterday, approaching those tops, the top for the cycle at well above 90. I really see the euro being dragged south as well. So I think if you really want to isolate the sterling weakness, I think potentially versus the yen and versus the dollar, the places to look for extreme sterling reactions to developments related to Brexit. I wanted to bring up a couple of FX charts here that I think are of interest, just in rapid fire fashion here. Aussie Kiwi is probing what I would call the bottom of its potential here. I'm not sure driven exactly by what. If you look at the yield spreads, I think maybe this is the Aussie playing high beta to other currencies. Interesting here, we have the RBNZ's or out later today. I think he might be taking exception to the rather extreme Kiwi strength of late. Look for that as a risk for Kiwi upside, and maybe if one is long Kiwi to potentially reduce. And then Euronaki with the weak oil price, we're approaching this 975 area, which I would argue is a pretty key range high there. And we see weaker oil, and we have a general weaker G10 smalls theme. I think some of that theme being driven by these weaker housing markets and fears of these housing bubbles in the various smaller G10 developed markets that could begin to weigh on the currency as those countries are forced to address that. Now, as we're all waiting for the U.S.-China negotiations ongoing, Peter, we have this crazy story about Huawei now talking about it's going to penalize any of its employees that own an iPhone or purchase an iPhone. This is a big driver. Apple's surprisingly, had a reasonably okay session yesterday after a gap lower.
Yeah, and we have this ongoing dispute between Qualcomm and iPhone. There's an iPhone ban for some of its models in China. This is this ongoing patent dispute. Apple is claiming Qualcomm is taking too much in licenses, so there's a situation there. There was no strong, I think, driver between Apple, but it was for yesterday's bounce back. But what was interesting to see in Asia was that Sony optical technology and some of the other suppliers in Asia were actually up almost 4 or 5%. So. And we missed the chart for this presentation this morning, but what's interesting is whether it's Apple who actually beginning to form sort of a bottom. It is bottom. It's down more than 30%. So it's been a crazy move for Apple. But I still think that actually we're in for potentially a very weak Christmas. As I wrote on Home.Saxo a couple of weeks ago, Apple is beginning to discounting some of its phones.
I've noticed ads for discounted iPads. These types of advertising you're not accustomed to seeing from Apple.
Exactly. There was a report out a week ago that actually, if you look across a lot of countries, the ongoing rebates and sales that are on display already now is massive. Normally it's after Christmas, but it's already happening 3 weeks before. So there might be some issues in the global economy, excess inventories, not only in iPhones, but in other categories, because there is a lot of sales going on.
Okay, we don't have much on the commodity side of things. I have pulled up a gold chart here. I think the big move in gold, if there is one coming, will await towards the end of the U.S.-China negotiation period on trade and whatever that China decides to do with its currency. A renminbi weakening would be considered gold negative, I think, by all accounts. But for now, Kim, your focus is on this pretty darn well-defined channel, and we're reaching a pretty interesting level on the moving average as well.
Yeah, that's true. We are very close to the 200 daily moving average, but I can usually see some resistance. But yeah, this rising channel, we talked about it before, and 1275 going into January. I think it's likely. I checked some of the technical indicators. There's no divergence. There's no imbalance or anything. So I believe. I mean, it is in an uptrend, short term at least. So a little bit of a correction, we will see that. But yeah, we're moving up there.
Okay. Let's round it out with the economic calendar for today and the rest of the week. Very little here today. We have some UK data, but with the Brexit situation, this will be noticed but not really reacted to, I feel. The Germany's ZEW survey has been pretty ugly. Wouldn't expect any change there. And then I think the event risk for potential movement, driving potential movement in a currency, the RBNZ speech out much later today. And then we have. I saw this yesterday. I'm not sure if it's still the case, but look out for the EU's Barnier to sending signals on the EU stance on Brexit. It sounds like they're taking a hardline stance. I have a very hard time seeing a chaotic deal next March. I don't see how we avoid that if we don't get a vote for something resembling May's deal. But let's watch what the signaling is. I think it really is, from the EU side of things, a game of so-called chicken. Until somebody gives, I have a hard time seeing the EU saying, "We're sorry, no deal. Let's send the EU economy into recession just before parliamentary elections in May." Then we have the U.S. CPI up tomorrow as well. Could be an input there into the December FOMC meeting. A couple of central bank meetings on Thursday, Norges Bank and the ECB, as well as Switzerland as well, and the EU summit on Thursday and Friday. Will be interesting, of course, for EU headlines and the new twist with the French intention to expand its deficit beyond the level of the Growth and Stability Pact of 3%. I think a very, very interesting political situation there as indicated. That's it for today, and we'll be back tomorrow with the Saxo Bank Morning Call.